this part of our lesson, we're going to have the exploratory data analysis. So it's going to be two parts, but I'm going to have it the first one, which is categorical data. So as you know, our data is composed of both categorical and numerical features. So it's going to be a long one. So with that, we're going to start first with categorical data. So the first thing that we're going to do is we're going to divide our data set into two. These are the categorical and the numerical features. So we're going to use this one to do that. So we're going to execute this. And with that, our data is now divided into categorical and numerical. So anyway, when we say categorical, it's something to do with an object, and numerical, it is something to do with numbers. So it can be int 32, int 64, and so on and so forth. Let's first have the categorical data. And the first thing that we're going to do is we may want to know the description or how our data is being described. So we're going to use this function to do that. So here, what we can see is the count, that is the number of how many times our data has values. So for customer, we have 8,099, and actually all of them have the same count. So for the unique, so our customer has 8,099 unique values. So that means we have 8,099 customers. And as you could see here at the top, for all of them, the top here means that this is the particular value in our data set that has the most number of frequencies. So for example, for the state of Oregon, for the state, the top value is Oregon because we can see that 2,475 times. For the response, it is no, and that we could see 6,926 times the word no appears in this column response. So these are all the categorical variables we have in our data set. We have customer, state, response coverage, education, employment status, gender, location code, marital status, policy type, the policy, the renew offer type, we have the sales channel, the vehicle class, and the vehicle size. So we're going to know them one by one. So we're going to understand the statistics of each numerical feature or categorical feature. So we're going to first have the customer column. So we're going to execute this. So as you could see, we have just 111 here. Why is that? It's because we have 8,099 unique values that corresponds to the count here. So that means for each customer ID, there is only one frequency as being suggested here because the highest frequency is only one. So all of them has only one entry in our data set. So sometimes with that kind of setup of this kind of feature, so the best thing that we're going to do is to just sum the values sometimes if we want to do that, or we may want as well to just get the first five entries. So we're going to have this one. So that becomes cleaner to look at. Now let's go to our response. So what is this? Let's execute this. We could see that no has 6,926 entries and or unique values, and yes has 1,173. But of course, if we want to have the sum for all of them, then we can have this one. So that's still 899 or 8,099. So this time, sometimes it's very not advisable to just have the numbers here. So it's always better to use the visualization because that can give us the picture of the story at one glance. So we're going to have this. And so you could see that here we have the comparison between the no and the yes. So basically we have a very imbalanced data, and from this time we can already think of what kind of technique we're going to use if we're going to have logistic regression or any algorithms for classification of our data set later on. We can actually think a lot of techniques how to deal with an imbalanced data, but we're going to have that in the future. because we do have a lot of features, categorical features. Sometimes, it's not really advisable to just have them one at a time, or I mean, one at a time. With the use of this function, we can easily identify the entries or the count of all the features in this categorical feature. So we're going to execute this one. All right, now we already have this. So sometimes when your data is composed of millions of values, then it would take a few minutes, sometimes maybe an hour, possibly if you have really millions and millions. But for this one, because we only have 8,099, then it's just easier. So as you could see in this case, we could see the different counts of each unique values in each column. So you have in there the employment status, the gender, and many more, right? So it's there for the vehicle class and of course for the vehicle size. So sometimes, as what I've said, this is not really advisable, especially if we would like to understand at one glance what the story of the data is. We're going to visualize each one of them, and to visualize the values or the counts of each categorical feature, we're going to have this one. So first, let's have the state. Okay. So using this, as you could see, we have different states in the state column. So we have the Washington, the Arizona, Nevada states, California, and then we have the Oregon. So as you could see here, the Oregon, the state of Oregon, we do have a lot of customers or clients in that state, and it is followed by California. Just looking at this particular graph, we can think that a marketing team has to focus on these two states than other states, like for example, the Nevada and Washington's, because we just have few clients in these two states. So this is one of the main advantages of using the visualization. Now let's proceed to what about the coverage? What can we see in here? So for the coverage, we can see that we have this basic coverage that is very saleable to our clients. So what does that mean? Most of them just get the basic. So the next one is extended. Or it could be that after the basic one, when they have some money, then they could possibly upgrade their contract or their policy to extended, or they would like to get another contract which is having an extended coverage. And of course the premium, which is just 728. So in comparison to basic, most likely this is around 5,000%, 500%, which is the proportion of premium to the basic. And this one is almost a half of the basic. That really tells the paying power of our clients. The next one is education. So here, I think it's very important to understand what is the educational level of our clients. So let's have now, most of our clients are bachelor's, college, or just high school students. And we only have very few who are doctors who have doctor's degree and also master's degree. So this would really tell you the paying capacity, the purchasing power of our clients. So it's always expected that doctors, those who have highest degrees, which are doctor's degrees and master's degrees, to have better salaries in comparison to those who have bachelor's and just only college or even high school. But of course, there are some exceptions to the rule. And if we are going to examine two, in this one and then this one, then we can say that our hypothesis can be like this, that the bachelor's, college, and high school clients or below don't have that enough money to buy extended or premium insurance coverage. Okay, that is just our hypothesis. Of course, that will be tested later. Then let's go to gender. So between men and women, or male and female, it is the female that we catered more than the male counterparts. But of course, the difference is not that big. So it's just they are almost balanced. What about the location? Okay, let's execute this one. So for the location, we have a lot of clients in the suburban areas, and it is followed by the rural, and then of course we have the urban areas. And that would tell you at what particular place in a certain city, in a certain province, you're going to focus on your marketing. Then we have the marital status. Among married, single, and divorced, we have a lot of clients who are married. I think this also explains why we also have a lot of high school students who are insured. Can you see the connection? What about the policy type? Which one is very catchy to our clients? So personal auto, this appeals most to our clients than the corporate auto and the special auto. And we have the policy. Let's execute this. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So among these 9 policies, which one is really appealing to our clients? So it is personal L3. So the least one is we have special L1 and we also have special L2. Special L3 is not that much too. So this would tell you what kind of personal insurance, policy you would like to offer to the clients. So for example, if he's going to get a personal L3, maybe he also would like to get the personal L2. So if we would like to offer both products to the clients, then this chart can help you which one is really more appealing to him or her. So for example, if he is corporate, as you could see, corporate L3, then we have corporate L2 and corporate L1. Corporate L3 is really more appealing to our clients. But of course, maybe you can possibly offer corporate L2. But then, with that in mind, you also have to examine the purchasing power of the clients, and also you have to correlate that to what kind of policy type is going to get. Will it be the corporate auto or the special auto? Because that can also tell you which among these policy that is more appealing to him. What about the renew offer? If our clients would like to renew, so among these offers, which one is really more appealing? Let's execute this. And now we have offer one is really more appealing than offer two. And actually it's the most appealing to the clients. Then we have the sales channel. Let's execute this one and we would know which one is really giving us more clients. So agent. So I think this one is really face-to-face talk with the clients. And I think this also really makes sense because when you talk to someone face-to-face, then there is really this connection. There is really this emotional connection between you and the client. And that is why having the face-to-face selling is more effective than the rest. Then we have the vehicle class. Which one is the most that we have? Okay, so we have the four-door car. So this is the usual vehicle that is registered or insured. And for the vehicle type, we have, see what is this? So we have the med size. Med size is the most that we have in our insurance. Do you want to know more about this channel? Just click these cards. We do have a lot of free data science courses for free like machine learning essentials, deep learning mathematics, and a lot more. Here, you can always learn an upskill for free.